What's up, guys? This is Goldman Roshan. Today I'm going to talk about the important concept in a forex trade, that is counter trend trade, which is very much essential while doing trade in any pair of currencies like gold, euro, USD, pound, and so on and so forth. All right. So if you don't know about the counter trend, I am going to explain from the very basics, which will help you to get a complete idea about the counter trend. All right. So let me explain it from the very beginning. So the overall trend was up like this, the bullish candle, the next candle also printing like a bullish like this, another candle obviously the bullish, and the next candle printed like a bearish candle. All right. So the next candle also printing like a bearish candle, the next candle also printing like a bearish, and if you know, the next candle printing like a bullish. In this phase, I know many of the trader used to see for a buy, all right, because the overall trend was up right up over here, and most of us are usually take a buy, but it does not mean that when we take a buy, price will always increase to our directions. This is not a mandatory rule. So market anything can happen, and the next candle printing like a bearish like this. All right. So initially, if you third that it has created a support at this point, and the next candle went up, break the high of the previous candle, would not able to get a sufficient liquidity to price to push up. So finally it dropped down and printing like a bearish candle, break and close below this support, means if we got enough range to the left, like more than plus 30 pips. All right. So at this point, if you think only for a buy, then can you make a buy at this point? Obviously not, because the candle is printing like a bearish and it has a break and close below this support. So this is something called the very important concept while it comes into the counter trend. So the next candle printing like this, moving up, grab liquidity, now trying to break the low of the previous candle. This will be your impulse entry in the counter trend. So you can expect the candle continue to drop down like this. All right. So your stop loss might be at this point. So this is called the counter trend setups. So in order to trade the counter trend setups, the first requirement that you need to see is, let's say I'm talking about the conditions. So condition number one, what you can expect is, while it comes into the trading, is number one is you need to have a trend should be like up. All right. If you are thinking the counter trend means down, the trend should be up. And the second thing that you need to know is you could have a resistance to be formed, means this is the higher high and this is the higher low. So what's the probability that the next candle will continue to push down and making the new lower low? It's going to be very, very high. That's why we need to have a good mindset while doing trade on a counter trend. So the second thing that you need to see is you need to find higher low, like a resistance to be formed. All right. So this is the second requirement. The third is the candle should break and close below this support, means break and close. All right. You need break and close below support. And the third thing is candle must created the wick and then need to break the low of the previous candle, where your impulse entry will be executed. If you could not find this wick and you put your stop loss above the candle, it's a way too big stop loss. So for us to be in the safe side, we need to have a wick at first and then need to break the low of the previous candle, and you can expect like this. So how many of time you can see this type of market structures in the trading career? I think many of the times, and there is a probability that you miss this type of trade in your trading career. So this is the first cases of the impulse entry in the counter trend. Now let's talk about the another type of trade in the uptrend, which is obviously called the counter trend setups. All right, so I'm going to explain the next counter trend setups. All right, where you can see the bullish candle like this. All right, the overall trend was obviously, here is also the up printing like a bullish candle, another also bullish. All right, another extremely bullish, and another obviously the bullish candle like this. And you could have been find a resistance to be formed on the 30-minute time frame. The next candle also continue to push down like this, another candle pushing down like this, and you may find creating the support at this point. All right, and you may see the another candle continue to pushing up. You might think that it will break this resistance, and finally another candle also printing above the zone like this, and the next candle you find like this. All right, this is the bearish candle. So at this point what you can see is this is a higher high, and you might see this is a lower high. Means you may see like this to the lower resistance next, and you have a clean range to the downside as well. So what's the probability that the next candle will continue to push down? Since you got a higher low then lower high, so what's the probability that the next candle will continue to push down and creating like another lower low? It's going to be very, very high. So what you can do at this point is you need to have a solid bearish candle having the wick to the top, need to respect the high of the previous candle, and need to break the low of the previous candle where your impulse entry executed at this point, and you are expecting this candle to be continue to down. This is called the counter trend setups, where you might see this is a higher high and this is a lower high. All right, you need to find this type of setups in a uptrend. So this is the second type of module that we are talking about, the impulse entry in the counter trend. So the third type of trade that we need to do while it comes into the counter trend is, let me explain it very basics. All right, obviously the number third thing is when it comes to the counter trend setups, you may see sometimes what you can see is a candle creating the up like this, another candle creating a bullish like this, another candle like this, and creating the bearish candle like this, another candle printing like a bearish like this, and the another candle printing like a bearish like this, wick, and topper to the wick. All right, so what's the probability that the next candle will continue to push down at this point, where you may say this type of rejections to the upper side, and in a 30-minute time frame candle printing like this means this is the perfect impulse entry in the counter trend. So what you can do is you can expect the candle open at this price, need to create the wick at first, and then need to break the low of the previous candle where your impulse entry executed at this point, and you are expecting continue. If you find this is a support zone, you can expect that this candle will continue to drop down like this, the next candle will continue to drop down like this. So this is the perfect example of impulse entry when you can find this type of liquidity candle, like it's a type of existent candle. All right, when you find this type of candle, this candle the next candle created the wick at first. Listen, whenever you executed your trade, you must find the candle creating wick to the up at first, then need to break the low of the previous candle, then your impulse entry executed at this point. But before that, you need to have this type of huge rejections candle to the downside to put your trade in a counter trend. So you can put your stop loss at this point, but be ensured that you don't need to execute a higher lot size at this point, because it's a basically called a setups, all right, not a plus. So you may lower your lot size while executing a impulse entry in the counter trend. It's a crucial, and it is really going to be very important while doing impulse entry into the trend. All right, so this is all about doing trade on a counter trend. And if you follow these rules, then you definitely get a good chances to win over your trade. So hoping that if you find this video is very crucial and important and it will help you, please do not forget to like and subscribe, and also comment my YouTube channel so that the first video will reach up to you from the next time. Having said that, have a good day and have a safe day. Keep learning and earn throughout your life. Have a good day. Bye bye.